Thanks, Tim. Yeah, I'm sitting in the desert in Namibia, as you can see. It's a little bit warm. We need a little bit of drink of water. Yeah, no, it's a nice virtual background, isn't it? What an exciting time to be in uranium. We're seeing that demand is outweighing supply for the uranium, which is a fuel source for nuclear reactors. And we're also seeing that there's a lot more talk around carbon emissions and cost of power and reliable baseload power, and nuclear gives all of that. So there's only with COVID kicking in, about 40 million pound have been taken out of production this year. So subsequently, we're seeing a huge gap between production and demand, and that's set to continue for many years to come unless things change. And the only thing that can change is production has to increase. Now, there's no incentive for producers with care and maintenance, in projects in care and maintenance, or explorers like us to get into production because the uranium price is too low. We can't make money. So there's only one way for the uranium price to go, and that's up. And we expect that it will happen on the basis that we've got to meet demand from these nuclear reactors. So if you can go to the next slide, we've developed a uranium company in counter-cyclical. And what we've done is through the low price times, we've acquired assets that met a certain criteria, and we've built up a tenement position in Namibia. As you said, we've now got the largest tenement position in Namibia and in the Erongo region. And this is all underpinned by upgrade beneficiation process. So we've been fairly quiet through that period of time, and we haven't been spruiking what we've been doing simply because we didn't want to tell everybody what we were doing. Our peers might trump us in some areas. So now is the time to start telling everybody what we're up to, and we've been delivering on that strategy. We've picked up 48 million pound of high-grade assets in Australia, and we've also got the largest ground position for nuclear fuels in Namibia, and we've explored 2 of those EPLs of the 10 or more we've got, and 2 of them have come up trumps with uranium. So we're very excited about what the future brings for exploration, and we're very excited about how the company can develop through this expected uranium price rise. So upgrade is what's lowering our cost base and providing us the incentive to explore, and it's something that others don't have. So if we can just move to the next slide, we can show you the map of Namibia, and this is the Erongo region in particular. Rossing have been operating here since 1976, continuously operating for 44 years. And I'll take you back to 2007, when the uranium price jumped to over 130 bucks a pound on an issue with utilities not buying fish sufficiently before that, a lot like we're seeing now, utilities not buying to feed their reactors. Marenica and many other shareholders of companies with exposure in Namibia made a lot of money last time the uranium price rose, and we expect the uranium price to rise again soon. So what we're targeting paleo channels, which are secondary uranium deposits, not like the Alaskites of Rossing, but where the uranium's leached from the mountains over millions of years and run down towards the coast in old river systems, old paleo channels, and deposited when conditions are suitable. So we're looking at deposits that are less than 30 meters deep, really shallow, easy exploration, low cost exploration. So that's what we're focused on. So we've got our 61 million pound uranium resource at Marenica, our namesake project we had when the uranium price was 130 bucks a pound last time, and we were 130 million market cap. Now we're sitting around the 12, 14 with a hell of a lot more assets in Namibia and Australia, and a lot more blue sky potential and exploration. So we're excited about what's ahead of us. And if you can go to the next slide, we'll just show you the Namib area down the south east of this Erongo region. Next slide, please. Hello. There we go. So in the Namib, we got a continuous land package of tenements. We've explored at Hiderbeb and Copies. It's a province that General Mining explored in the 70s and early 80s. General Mining morphed into Gencor. They found Langer Heinrich, they found Tumis and Oceananus, all from sort of radiometric footprints from surface. And they then highlighted a lot of other areas within the EPLs we've picked up that are high exploration potential. However, they left the country before they could explore these. And what makes these attractive for us is that General Mining have got exploration targets on them, and also they're upstream in an old river system of known deposits. So the uranium had to flow through these tenements we've got before it's precipitated in these other deposits. So hence we're expecting that they will also precipitate upstream and where we're targeting. So just go to the next slide. I want to talk to you about Copies, which is in the middle of this slide. I'm sorry, I'm seeing a huge delay in the slide moving forward. I don't know whether you're hearing me. Copies is an area that we targeted as our first EPL that was granted to us. We explored it with a little bit of drilling to follow up what General Mining had done. We found a lot of uranium there, and then we started to use, because we don't see a surface footprint in this area in terms of radiometric signal on surface. As an example, the second drill hole on this slide, it's got 1 meter at 7,000 from 1 meter deep, and this drill hole was only 4 meters deep. So it's got a very high radiation coming from it, but it doesn't reach surface. So the radiation on surface would be lower than what's coming out of your granite benchtop in your kitchen, or lower than what's in the prefab concrete wall in the factory or warehouse you might have visited. So it's very low radiation at surface, and so we've had to use ground-based geophysics to get identification of where the channels are. So that just picks up the difference between channel and bedrock, or paleochannel and bedrock. So that enables us to delineate the outline and also indicate the depth of the channel. So we've gone and explored with drilling. We've only drilled about 40% of the paleochannel out, and then we sort of looked at it and went, we can go and spend another $1 million and drill a resource out, or alternatively, we can go and do something else for that $1 million. And if you go to the next slide, we will find that we spent $130,000 to explore and find Hirabeb. Hirabeb is 15 times the size of Copies in terms of the surface area of the EPL, and the channel we've located is wider than the English Channel, to put it in some sort of perspective. So, and we've identified mineralization over a 30-kilometer length. So we know that there's a lot more channels there. We also want to find out where these channels are, what the depths are, and also where we might find traps. So you can imagine an old river system. The solution flows down and the water flows down. It might hit a dam, it might hit some sort of diversion that's got to go around. So they're sort of what we would call traps, where we believe that there's probably higher grades of mineralization over a larger area. So the fact that we've got mineralization in the channel tells us there's a high prospectivity of finding a lot of deposits, or larger deposits on this tenement. So, and a lot more of that to explore. So really excited about what we've got in future there of blue sky, but also that's 2 of 7 tenements we've got in that area. So some of the money that we're going to get from capital raising coming now, we'll be putting into maiden exploration programs on the other 5, but also, Hirabeb is a fantastic target for us. So now moving away from Namibia back into Australia, and what we've got is we've picked up these assets in December last year, and we purchased them because one thing is we paid 4 cents per pound of uranium in the ground. Now, when I consulted to Extract Resources on the Husab project in Namibia back in 2011, they sold it when the uranium price was $55 a pound. They sold it for $4.50 per pound in the ground. Now, I'm not suggesting we're another Husab or another Extract, but what I'm saying to you is 4 cents per pound versus $4.50 per pound. If we see the uranium price move as we expect it to, these assets won't be worth 4 cents a pound. And they definitely won't be worth 4 cents a pound to us, because what we've done, we just announced last week the Angela deposit, 31 million pound at 1300 ppm, 25 k's south of Alice Springs, so near infrastructure, a great spot to be. With the impediment to developing that project has been the acid consumption for the leach. We've gone and reduced the acid consumption from 104 to 24 kilos per tonne. That's 80 kilos per tonne. The acid price delivered to site is 40 cents a kilo. You don't have to be a good mathematician to work out that 80 times 0.4 is $32 per tonne of ore. So that's a huge saving, and through a $20,000 test work program, we've been able to identify that. So we're now sitting back and with those results trying to work out where we take this project to the next stage. But that's a sort of an example of how we can add value to these assets. Minerva has got 29 drill holes that drilled in back in 1978 with intercepts of greater than 10,000 ppm or 1% uranium. They're exceptionally high grades. And they've also gone and drilled, assayed 2 holes for gold. One, they didn't have uranium in it, so I'm not sure why they assayed for gold. The second one had a 19.2 grams per tonne gold intercept and a 2.3 grams per tonne gold intercept. If we're a gold exploration company, our shares will be rocketing on the basis of that gold based on what others are getting. So we're excited about what that does for us, and we will need to go and understand how much more gold's there. So once our Premier allows us to move around the country and get into Northern Territory, we'll obviously go and have a look at that and work out where we take it next. So U-pgrade is another one. You look back at the 2015 annual report for Paladin, they had a resource of, we can't state the resource, but they had it in there. And we add those pounds to our baseline. Our purchase price was 3 cents per pound in the ground. So very exciting prospects for us on those. Upgrade, we've mentioned it. To us, it's a differentiator between us and our peers. It's a process we developed in-house in conjunction with CSIRO. It rejects greater than 95% of the mass prior to leach. Leach is the highest unit cost operation in any processing plant. So what it does is it gives us optionality because it produces a low mass concentrate of high grade. We've taken Marenica from 93 ppm to 5,000 ppm, 50 times upgrade. We've lowered the capex and opex by 50% compared to conventional, and it gives us optionality, which means we can either produce yellowcake on site, or we can develop a smaller project and take a concentrate off-site to someone like Rossing, and they can leach and refine it. So that lowers the capex further again down to 25%. So a real clear differentiator between us and our peers, and it really is something that adds significant value to us. So on the next slide, we look at, we've got a small board, we've got technical expertise. I'm the champion of the upgrade process. We've got skin in the game, and directors and management have 5.8% of the shares. So we've committed to the company. We've got, we're similarly aligned to shareholders. We've got a low number of shares on issue, 143 million. Usually you see 2 billion there for a lot of uranium companies. We've got some cash in the bank, but we are looking to get some more money in to advance our exploration efforts. So in summary, in the next slide, you'll see that we've got these large-scale Namibian tenements, the largest in the country. We've got successful exploration. We've explored on 2 tenements, and we've got success on both. So we've got the track record there already, but we're not resting our laurels. We've got a lot more work to do in Namibia to add value to shareholders. We've got these assets in Australia we've picked up for a song that we can add value to. Both of those, high quality assets in their own right. When you add upgrade to it, it takes it to the next level. So really, we've got tremendous leverage to the uranium price, but we've also got leverage to what we're actually doing with the company and building the company. So really quite exciting times for us. And now we've quite often talked to our supporting broker in Melbourne that we're probably the least talked about uranium focused stock on the ASX with the greatest potential. So we're really excited about where we're at, what we've achieved, but we've got a lot more value add to do to our shareholders, and with an excitement in the nuclear power sector at the moment, and a bit of tailwinds behind uranium, we can see some really substantial moves in uranium companies. And 20 years ago, back in 2010, there's 500 companies that had uranium assets. Now there's less than 50, and half of those are supported by government. So there's a very few number of good quality uranium companies that investors can get into, and we think we won. I'm a shareholder, and I'm certainly putting my money into this capital raising. Thanks, Tim.
Thanks, Murray. So, you talk to the uranium price and can kind of crank things up when the uranium price improves. What are the catalysts to drive the uranium price higher?
Well, uranium price it's the nuclear reactors need to buy fuel, and fuel is uranium, right? And they're depleting their stocks down now. If they don't start buying, right, soon they're going to run out of stocks in a number of years. Now, it takes 2 years to go from yellowcake through to nuclear fuel rods, right? So there's a delay there. Now, there's no incentivization of supply to come on stream, and there's a deficit in supply demand unless uranium price is higher. So that's the catalyst: the consumption of uranium in nuclear reactors, and the fact that there's no, production is not going to increase because you can't make money. Cameco shut down the largest uranium mine in the world. They've just started it up again, but they're buying on spot and selling into their contracts. And a lot of these contracts are dropping off. They might be selling them at $50 a pound, and the uranium price is at 30. So they're not going to renew contracts at $30 a pound. You're not going to waste a valuable resource where you barely make a cent on it. So the catalyst has to be utilities buying and pushing the uranium price up to incentivize new production.
We've got a question here from a well-known resource analyst. Reactor developments often get delayed. Are you seeing a backlog of past announcements finally coming through to start securing long-term uranium supply? And could uranium users be JV development partners?
So the nuclear reactors, for a period of time when we started to move towards renewables in a couple of countries, they took a lot longer. So it began to get a reputation of taking 7 to 10 years to build, but that's come down. And we're also seeing, as an example, say France has 70% nuclear power. Germany's gone towards renewables. Germany's got double the power cost of France and 10 times the carbon emissions. So we know that that side of it's not working. Look, from our point of view, are we going to be JV'd? Are we going to be bought out? Are we going to develop? We've estimated it's going to cost about $50 to $60 million capex to build a 3 million tonne per annum plant producing 1.5 to 2 million pound per annum, which is a good sized plant. So, for a company like us, that's well within our reach. If we needed 400, 500, 800 million, well, that's just not going to happen, and you need Big Brother. But so we'll work towards developing. We may get taken out along the path, but we certainly believe that we can become a producer and supply into some of these reactors that need it. But also SMRs are becoming, a lot of talk about small modular reactors. They vary in size from 3 megawatts to 300 plus megawatts, and they're built in a factory, transported to site. They can supply power to a town, a remote town. They can supply to cities, and they can be modular. So you just put one after the other, and they're going to become a very important part of our future power generation.